All right, everybody. Jeff Gibby here. I hope you're doing well. Thanks for coming today. We had a lot of signups for today's class. We're glad you could make it. So anyway, let's go ahead and get started. You should all be able to see my screen. Let me know if you can't. We're going to go ahead and, I know you've got this memorized almost as much as I do, but today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information and software techniques presented today should only be used investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Excuse me. All right. Well, if you haven't heard Dr. Barry Burns talk before, you're in for a real treat today. We've been working with MetaStock, or MetaStock has been working with Barry for a number of years now, probably 5 or 6. And we have a very, very popular toolkit that is called the Top Dog Toolkit. I'm going to talk a little bit later about how we've improved it and that kind of stuff, but Barry's always just such I love his kind of 5-step process and his 5 energies method for trading, and he's gonna spend a little bit of time talking about that today. So I'm going to get out of the way for a little bit and bring Barry on. Barry, who are you?
Who are you? Yeah, that's it. Who are
Okay.
you?
I got it.
One of the top 5 questions, right? Who are you? What are you? Where did you come from? Where are you going?
Yeah.
All
It's
right.
an
Well,
interesting way to start too. All right.
it is. Thank you, my friend. Yeah, Jeff and I have been working together for a long time, and even pre-Jeff, I've been working with MetaStock. In fact, MetaStock is actually the very first charting platform I ever used in my life. And here I am, and I'm still using it after all these decades, literally decades. It's crazy. I started trading when I was 8. I know that sounds crazy, but there's a reason behind that. My dad was a stock trader. It was his passion and avocation in life, and he was so passionate about it that I really had no choice but to learn, because he just would talk about it incessantly, day and night. And then he started formally teaching me when I was 8 years old, and so yeah, I started out as a stock trader and did well. Obviously, it's kind of nice to have it in the family and to be brought up with that, and have a mentor who has your best interest in mind. And fortunately, that's what I had, and it was a great bonding experience between me and my dad for his entire life, our lives. And unfortunately, he passed away a few years ago, but he continued trading up until the very end when he was 88 years old and still placing trades. And we just shared so many things. It was a beautiful, beautiful thing. I am also the author of Trend Trading for Dummies, part of the famous Dummies series of books by Wiley Publisher. I'm sure you're familiar with that series, and they came to me a couple of years ago, and it's kind of nice, you know. A lot of people who want to write a book, they go out there and they write a book, and then they seek a publisher, and with me it was just the opposite. One of my other mentors, he kept saying, Barry, if you don't write a book, I'm going to have to kill you. And he kept encouraging me to do it, and I'm like, oh man, so much work, I just want to trade. And so again, he passed away, unfortunately, and he saw me as his protege and passed his torch and his method over to me, and I've enhanced it and changed it since then. But anyway, I guess he was speaking prophetically, because Wiley Publishers called me out of the blue. Well, it really isn't out of the blue. I mean, I work with a lot of the companies. I've done seminars for the Chicago Mercantile Exchange, the Eurex Exchange. I've been a contributing author to several other books out there, and so I'm pretty well known, and I used to travel around all the money shows and that sort of thing. So I guess my reputation preceded me, and they asked me to write that book, and so I said, okay. And boy, was that a wonderful experience, because Wiley Publishing is a great company, by the way, really lovely people to work with, very professional. And I learned a lot in the process too, but it was a tremendous, ridiculous amount of work. But anyway, yeah, feel free to pick up that book where better trading books are sold, Trend Trading for Dummies. And anyway, enough of that. That's me. Now, as you see on the slide there, who are you? I can't actually see what you're typing, if you guys are typing anything, so I'm going to just kind of have to do this one way, which is fine. So what I'll share with you is a survey that I do annually. And this survey goes out to literally tens of thousands of people. And then I do ask this in an interactive basis on some of the webinars I do as well. But I'll tell you what, it's after all this time, we have found that there are common issues that people tell us they have problems with over and over and over again. So I'll just share with you what they are, and you can see for yourself whether these are problems and struggles that you're wrestling with as well. So here are the top 5. Number 1, a lot of people say, you know, I enter the market, let's say they buy, and then as soon as I buy, dag nabbit, when you believe it, the market turns around, goes down, and stops me out. But that's not it. Then, after it stops me out, the market turns right around, goes back up in the original direction of my trade, and goes to the moon. And that is a very common lament, worded in various different ways, but that's the general idea. Any of you struggle with that? Any of you had that same issue? Yeah. Very, very common. Number 2, another big one is people saying, well, I get into the market and it goes in my direction, I make a little bit of money, but then I get out too soon and the market keeps going after I get out. And so I could have made a lot more money. I'm getting out of big moves too soon, and so not making the big profits. Another one that people talk about a lot is getting stopped out too often. Getting stopped out too often. Not sure where to place their stops, or not when to get in, or whatever the problem is, they just find themselves getting stopped out. Another one is the opposite of not knowing the best place to exit. How do I determine when to get out? If the market's not going to move very far, I'd like to know that so I can get out. And if the market is going to move far, then I'd like to stay in for the big move. And then another one is trading a trend that doesn't follow through. Boy, do I hear this a lot. These are not necessarily in order, by the way. But, man, I continue to hear this one all the time. People saying, okay, I wait for the trend, and the trend is up, and it's clear, and so I get in. Then, as soon as I get in, the market goes in the opposite direction. Or I go short, and it's clearly a downtrend. And finally, when I say, okay, this trend is confirmed, it's short, I'm going short, and then as soon as I get in, the market goes up. And I mean, I get people literally saying to me, I really think the broker is watching my trade and taking the opposite sides of my trades over and over and over again. And I ask them, I say, well, how large is your trading account? They say, man, well, I've got $5,000 in my trading account. And I say, you know, no disrespect or anything, but I really doubt whether your broker with hundreds of millions or even billions of dollars is watching your little $5,000 account and trading against you as an individual. So no, that's probably not the problem. The problem is that you need to learn how to trade effectively. And so one of the things I want to share with you is and this is the takeaway from this slide, if you look at these issues and you say, yeah, you know what, I can relate to this one or that one, or maybe a couple of them, I want you to understand that you are not alone. These are common, like I said, these come from surveys of literally 50,000 traders each year. That's just on a yearly basis. And so what you're experiencing is common. In other words, there's nothing really wrong with you. There's nothing uniquely wrong with you. Do not feel bad. These, in fact, even myself, and I do very well, but I've had these same problems. I've had the same problems. Every professional trader has had at least one or more of these problems. These are the common struggles that we go through in order to become successful. So what that means too, the other piece of good news is not only are you not a uniquely bad trader, but the other good news is there's answers to these problems. So not only is there hope, I mean, there are literal answers. And this webinar, I'm going to share some of those answers with you. So let's jump right into that. How do we deal with these issues? Okay, so here's how we do it. We put together a trading methodology. And as you've already heard, as Jeff said, this is about what I do is measuring the energies in the market. And that's exactly what the Top Dog Trading plugin for MetaStock does. It shows you on the charts through custom programming these energies. Now, what do I mean by energies? What I mean by energies It's the energy of money, the actual energy of people buying and people selling. Because that's what the markets really are. They're a huge international auction place. People bidding, people asking, and that's cool. But what really matters is the actual commitment after the bids and the asks. Who's going to actually say, yes, I will pay that for this market? And other people who say, you know what? I like this, I'm going to sell it. Or, gosh, it keeps going down, I'm losing money, I'm going to cut my losses. It's the actual commitment of money. That's what I care about. Money is, follow the money, like they say. And actions speak louder than words. So I'm not really too interested personally in what the analysts say or what the talking heads on the various TV shows say. And there's definitely a place for fundamentals. My dad primarily traded fundamentals, as a matter of fact, but I'm more of a technical analyst trader. So when I'm looking at these energies, I'm looking at what is. You see, not what's hypothetical, not what could be, not what should be, not what somebody says, and not even what I think. I'm trading facts, buying and selling facts, where people have committed money. So there's 5 energies that this plugin measures. So let's go through these and just list them. And by the way, my trading is very methodical. It says there my trading methodology in quotation marks. That's very intentional. I don't call mine a system. I mean, word system is fine. To me, it means something a little different than what I personally do. I like the word methodology because what I do is trade very well. Methodical, very rule-based, very objective. When you look at the plugin, it tells you what that energy is. If trend is up or down, it just tells you. And we'll show you some screen captures here in a minute where it's either up or it's down. It's black or it's white, or I like to color it red or green. So that's the first thing I look at because, again, by the way, the 6th most common problem people said they had was information overload. Any of you experienced that? A feeling of overwhelm, too much information, too much news, too many types of indicators, too many types of systems, too many gurus. Oh my gosh. In the financial markets, yeah, there's no shortage of information. And on the one hand, that's fun, that's exciting, and that's great. But on the other hand, you can't function with all that information. So when that actually comes to trading, you have to make some decisions and just say, okay, here's my niche. I'm going to trade this stuff because our brain can only handle, well, psychologists say the human mind can handle 7 pieces of independent information concurrently. But I don't like to stress my brain cells. So when trading, I like to keep things very simple. And so I only look at 5. And that really fits within my comfort level. And that's all I need to establish a probability scenario. So when I trade, I'm very methodical, very organized. I make sure that I don't ever get a feeling of overwhelm. So when I look at the charts, I look at these 5 energies in this order to keep my mind orderly, to keep my mind clear, crystal clear, so there's no confusion. So first thing I do, look at a chart, and it will tell me with the Top Dog Trading plugin, is the trend up or down? Okay, so that's the direction I'm looking to take a trade. That's very important. That's the first thing I want to know. Which side of the market do I want to be on? Is that enough to put my money in risk's way? No. No, that's one piece of information, and the number 1 does not have a probability scenario to it. It's not enough variables. So then I go to energy numero 2, number 2. And that is really important. This is something that so many people either don't use in their trading or they don't know how to use correctly. And that's the energy of momentum. Now, I will often ask, in fact, I just came back from a seminar in Dallas where I was meeting at one of the most premier trading clubs in the country. Wonderful people there, by the way, so friendly, so nice, very intelligent. Lots of mathematicians, scientists, engineers, unbelievable group of people. And a lot of good traders there, too. And whenever I go to these meetings, or if I'm doing webinars, I like to ask people, what are the 2 types of trends? And here are the type of answers I get. See if you can relate to this. The most common answer I get are uptrends and downtrends, or bull and bear trends. Is that a right answer? Yes, it is. That is a correct answer. There's more than one right answer to 2 types of trends. Another one I'll get is long-term and short-term. And yes, that could be true. Another one I get is high volatility or low volatility. That is also a true answer. By the way, something a lot of people don't know, some people like to look for high volatility markets because they think they move faster. Well, they do move, have bigger moves, bigger range in a shorter period of time, but scanning for high volatility markets is not really the best way to find what you're looking for. In fact, it's easier and less stressful emotionally to trade a low volatility trend, because high volatility trends, you've got to keep your stops really far away from your entries. So anyway, that's a little side note. We can get into that maybe a little later if we have time. But here's one answer that hardly anybody ever gives when I ask that question. And that is this. What are the two types of trends? Strong trends and weak trends. I never get that answer, well, except from my own students. And that scares me. Well, actually, that tells me why so many people are losing money. Because if you don't know the difference, first of all, if it's not even in your awareness, that's the problem. It doesn't even occur to people to determine whether a trend is strong or weak. Well, I mean, think about that. If you're trading a weak trend, then we would expect it to not continue. So if you're buying a weak trend, I would expect it to fail and go in the other direction. On the other hand, if the trend is strong when you enter, then I would expect it to continue. It has strength behind it. Now, we use this term momentum as strength. And think of that. Momentum, by its nature, is a leading indicator. Why do I say that? Because think of a train going down the track. All right? Train has a lot of momentum behind it, right? And in fact, I happened to see this on the documentary a couple of months ago, so I actually know these stats. Otherwise, I wouldn't know this. But yeah, they were showing this train, and they said if the train is going 60 miles an hour and it has 30 cars on it, and you apply the brake, okay, now you apply the brake, will that train stop on a dime? No. Will it stop in a foot or a yard or 10 yards or even a football field? No. It will take it a mile to stop after you apply the brake. So it will continue in its direction. In other words, the trend of that train will continue for a mile even after the brake's applied. Why? Because of the energy of momentum behind that train. So we apply that same principle here to trading. Let's say that we see a trend, it's early in a new trend, we get a higher high, higher low. Now, we look down at our momentum indicator, which, by the way, my momentum indicator is included with the Top Dog Trading plugin, and you can just look there and see, is it a strong trend or a weak trend? Again, it's very objective. It's either yes or no. And if it's a weak trend, we will not trade in the direction of the trend. Why? Because it's not strong, so we expect it to just peter out, just poof, go away. Now, if it's a strong trend, again, momentum is a potential leading indicator, then we would expect that, okay, even if it's starting to weaken out, but it still has momentum behind it, it still should make at least one more higher high after I get in. Now, think of that. That is magical. I mean, that makes all the difference in the world. Because if you can notice that and only trade strong trends, then if you get that higher high, you can lock in some profits there, put some money in your wallet, and then you can move your stop to break even, and you're golden. That's how much of a difference that will make in your trading. It is absolutely powerful. You must know the difference between a strong movement in the market and a weak movement. The third energy then is cycles. This is timing your highs and your lows. And we'll talk more about this in a minute. I got a little more detail to share with you on that. And that also is, again, built in and signaled in the Top Dog Trading add-on. But this is basically timing your highs, timing your lows. And you know what, let me bring up a little drawing tool here and show you what I mean by that. And I'm going to give you a practical application here. So I kind of talked about this briefly as one of the problems, but by the way, I have to apologize in advance. My wife is an absolute amazing artist. I am an absolutely astonishingly horrible artist. It is astonishing how bad I am. So I have other strengths, but art, no, not it. And I'm also having to do this with a mouse. So my drawing here is going to be really insulting to any creative person watching. So, but go for the point. Okay, so first of all, let's look at one principle here that a lot of people don't talk about. All right, so here's a chart. A chart is a two-dimensional object, right? Here's our x-axis down here, price, and our, I'm sorry, time. See, I'm already screwing up. I'm thinking ahead of myself is what I'm doing. Okay, so there's time, and here's price, the y-axis. So a chart is a two-dimensional object. There's only two dimensions. What's interesting is, just like momentum, very few people have any kind of timing tool on their chart. Well, look at that. If you don't have a timing tool on your chart, guess what? You're left with one axis, 50% of the information on a two-dimensional object. How in the world can you establish a probability scenario looking at only 50% of the information on a two-dimensional object? 50%, 50-50. And it's even worse than that. W.D. Gann said of the two, time is actually more important than price. Now let me show you how this plays out in practicalities. And this goes back to something I already said. So we get a higher high, higher low, higher high, higher low. We say, okay, you know what, I'm going to buy there. Cool. Now, here's what happens. So we put our stop down here somewhere. Okay. And the market goes up, we get filled, and then it goes down and stops us out. I mean, that's a typical, oh, here's where it gets really bad, my friends. A, B, C, complex retrace. And then, boom, it goes up to the moon right after we get stopped out, right? So what's the problem? Why did that happen? It happened because we got in, we had the direction right. One of my mentors was a floor trader at the Chicago Mercantile Exchange. In fact, I went to Chicago, rented an apartment, and worked with him at the CME. And one of the things he said to me, I'll never forget, is he said, Barry, retailers are often right, but at the wrong time. And this is an example of that. You know, if you bought here, you were right about direction. The market did go up, but you got in at this time. Here's our time axis, when you should have gotten in at this time. And that was the only problem. Not knowing how to determine when to enter, again, can make all the difference in the world. If you don't know timing and you don't know how to read momentum, I mean, you're just done. You are done. You have no chance. These are two critical elements to trading. All right, so let's move on. Let me get to my beautiful Rembrandt off of there. All right, let's talk about the last two energies. These ones are a little more common. Support resistance, very common thing for people to use. That's a blockage of the first three energies. So we're looking to buy off support, short off resistance, and also using these levels for profit targets. And then finally, the fifth energy is what I call the fractal energy. So this is looking at the same market, but on a different scale. So let's say you're trading a daily chart, and you're looking for setups on the daily chart. Then I look at a weekly chart of that exact same market, and I call the weekly chart my fractal energy, looking at the same market on a different scale. Now, when we use the Explorer, the scanner, where you can actually scan for my setups in MetaStock. This is one of the most powerful tools. In fact, it just blows everything else out the doors. It's unbelievable. So you can scan. We've got all the trade setups already pre-programmed, pre-scripted into MetaStock, all my setups. Then it's trend trades, reversal trades, triangle trades. It's just crazy. Then what you do is you scan for it on your daily chart or any, whatever time frame you can scan with. Then you get the results of the setups, okay? Then you take those results and you run them through the scan again, but on a weekly basis. And when you put those two together, wow, really, really high probability trades. So, and that's one of the things. A lot of programs can scan, but they can't scan two time frames. But MetaStock can, and that's why I love it. One of the reasons of many that I love it. So what's the point of measuring these 5 energies? Why are we looking for these 5 energies? Again, I've mentioned it briefly in passing, but all trading comes down to determining a probability scenario. Nothing's for sure. There's always a risk in trading, always. But that's why we use stops, that's why we hedge our positions, etc., to mitigate that risk. But we want to make sure that over a large sample of data, the odds are on our side. And that's establishing a probability scenario that favors us. Now, the big question, of course, is, well, yeah, we know that. That's what everyone tries to do. But the big question is how? How do you do that? So here's how I do it. At each potential entry point, I ask myself one simple question. How many of those 5 energies are aligned? All saying buy or all saying sell? I give each setup a score of 1 to 5 based on how many of the 5 energies are aligned up or down. Obviously, the higher the score, the higher I consider the probability of success. And I liken this to taking each trade to court. So what I mean by that is we need 5 independent witnesses to establish a preponderance of the evidence. Now, some people oversimplify this. I mean, we like to make well, Einstein said it, make everything as simple as possible, but no simpler. And I don't think he was a day trader, but I love that saying. That's one of my favorite quotes of his, because I think it applies to pretty much everything in life, and it definitely does apply to trading for me. So we want to make everything as simple as possible so we can have clarity in our decision making. If you're a day trader, you can have speed in your decision making, and you can have confidence in it. There's few variables to consider, but on the other hand, you need enough variables to establish a probability scenario. Now, this is the thing though. You can't just choose any 5 indicators and say, oh, they're all going up or they're all going down, and get a probability scenario. What you need are 5 independent witnesses, or in our case, it's not even the indicators, it's the energies. It's the buying and the selling power that's happening in the auction place we call the market. The indicators just measure that energy of the movement of money. So the indicators, indicators do what they promise. They indicate. All right? If indicators made you money, we would call them money makers. And we don't, because they don't. But we need a way to, because my method is very methodical and rule-based, we need a 0-1. We need a black-white. We need a yes-no. And that's what the indicators do, is they give us that clarity of what that energy is so we don't have to use our own discretion. But the key here, the operative word in that last sentence, is independent witnesses. And what that means is these 5 energies were very strategically chosen because they're each one is non-correlated to the other 4. And that's what makes it significant when all 5 align. Very, very critical. So let's see what it looks like. Okay. So on the left, now you can do this intraday as well. I used a daily and weekly sample, but you could, I day trade. You can do this intraday. So, and you can do this, by the way, with stocks or futures or forex and options, commodities. I trade all those things myself. But so we got to put something up. I'm putting Starbucks up here, but if we put the euro up, somebody would say, hey, how come you didn't put a stock up, right? So just want to be clear with that. So on the left side, actually, let me bring my little spotlight up here. There we go. Now it looks like I've got a little laser pointer up here. So here's our short-term chart, 10-minute in this case, just showing you it works on different time frames. Okay, trend is up. See this red line? It also is indicated down here, by the way. Okay, we got this little cool thing here that just makes it real simple. But anyway, and it counts the waves for you as well. Why is that? Why do we want the wave counting? We've got to have the wave counting because have you ever heard the phrase, the trend is your friend until what? The trend is your friend until, yeah, the end. That's right, the end. So Why does that proverb exist? That proverb exists to instruct us to trade early in the trend, saying that early in the trend has a higher probability of continuing after we get in the later in the trend, right? Professional traders like to get in as early as possible. Retailers tend to wait for too much confirmation, get in too late. So we use wave counts for that. So this would be a first retrace in the trend. Wave 1, wave 2. Wave 2 is your first retrace in the trend. Wave 3, wave 4 is your second retrace in the trend. Here we get an ABC complex retrace. See? Now, look at this. So this is beautiful. This is kind of what I was showing before. Here, the cycle indicator, which is K, this black line here, it's a modified stochastic. It's a top dog stochastic. And here's your momentum indicator down here. But K doesn't get down to this lower level. We want it to come down to 20, and it doesn't. Here it does, right? Here it does. And so we're going to wait for that. Now, the other thing over here is, here we've got, this is a, well, we're starting a new trend, so let's go through our 5 energies. Momentum, the red line is your momentum indicator down here. That's angling up. We've got a little cycle low with mini divergence. You'll be taught these little patterns. There are patterns we look for here on the low. We've got support of the 50 MA. And then we go to our next higher time frame, 30-minute chart. And what we need here is we need for momentum, the red line, to be angling up on the longer term time frame. And we like to see cycle going up too. So we've got it. So that would be a 5 out of 5 trade. Remember we score them 1 to 5? That's a 5 out of 5 trade. I'll take that every day of the week. Well, I do, actually. So let me share with you now something very specific. My favorite trading technique for pinpointing market highs and lows for entries and exits. We've got to do 2 things. I'm going to actually, if you have MetaStock, you can actually start trading this right now. But you won't get the signals. The signals, we actually give signals, little blue signals for these kind of cycle patterns called mini divergences, second chance patterns. So what we do with the cycle indicator is we start with the stochastic oscillator. And we change the inputs. Now we do %K, and we change time periods to 5 and slowing to 2. And then we change %D parameters to 3 and simple. So here it is. You can see the screen capture. Now, what does this do? What's interesting is the stochastic indicator is not a cycle indicator at all, but I'm using it to measure cycles or time. But the stochastic indicator was created by George Lane. If you look at the mathematical formula, it actually measures momentum, not time. So why would I use it to measure time, timing? Okay, it's because it's a momentum formula. Actually, hang in there with me for a second while I explain this. So we are shortening. If you look at the defaults, they're usually longer. We are making these numbers smaller, and what that does is it squeezes the measurement of momentum into just the highs and the lows. And therefore, it will show a momentum shift at the top or the bottom of a cycle. And remember how momentum can lead price? So we're looking for a shift in that momentum to show a final cycle low or a final cycle high. That's the strategy, that's the math of it. Now, we also put in, as you saw, lines at 20 and 50 and 80, horizontal lines at 20, 50, and 80. Because we want it to reach extremes so we don't get stuck in the middle there. Okay? Now, okay, we already did that. So, we're going to use this indicator to measure cycles, time, and to find the final low going long or the final high to go short. But, like I said, with indicators, you can't just use one by itself. Indicators are not money makers. So, we don't use it by itself. Any one energy is meaningless. The number 1 does not give you a probability scenario. So we have to use it strategically with the other indicators. As I've already said, a little bit of review. We're not going to trade every cycle high and low. We're only going to trade the cycles in the direction of the trend early in a new trend. We're only going to trade the cycles that have momentum behind them. We're only going to trade the cycle highs or lows that have the fractal energy aligned. And now here's the new thing. We're only going to trade what I call second chance indicator patterns. What do I mean by that? Well, as I said, these indicate a momentum shift at the top or the bottom of the cycle. So let's show you what that looks like. First of all, let's show you what to avoid, actually. I like to, everybody shows textbook examples. I like to show the stuff that doesn't work. I mean, you need to see the textbook examples so you see kind of the meta pattern and get that in your brain. But hey, it's important to see stuff that doesn't work, because guess what? When you start trading, you're going to see the stuff that doesn't work, right? So it should be part of your education as well. So here, okay, cycle indicator goes to the top, and it gets above 80. So there's 80, 50, 20, 0, and 100. All right, it gets to the top, and it looks like that's a cycle high. Well, guess what? It is a cycle high. Problem is, it goes up and makes another higher high. So if you went short there, you'd be a bumming dude. You'd be like, wow, man, that didn't go anywhere. And then you get stopped out here. All right, that's exactly what I was trying to illustrate with my freehand that we don't want to do. So what do we want to do? We want to do something like this. Here the market comes in. This is, by the way, the 15 exponential moving average, this black line, and the red line to the 50 simple moving average. So now, here's what we've got. Momentum shift. We've got a little lower low on price. Equal low would be fine. Lower, lower, low. Now, look at %K, though, and %D. Higher low. See that? Higher low. So that's your mini divergence, your momentum shift. Momentum has started going up before price did. That means this move down is coming down on weakness, and strength has started to come into the upside. Therefore, that time, going back to time, this would be a time that would be a super high probability trade where you will most likely not get stopped out. That will be the final cycle low, and works out beautifully. So this little pattern now, this is just using the stochastic oscillator. When you use the top dog oscillator, then it's actually plots it for you. It actually gives you a signal there. So it's real obvious. Now, that's a trend trade. Here's an option for a trend reversal trade. We're going down, 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 down. Remember, the trend is your friend until what? The end. So toward the end of a trend is when we start looking for trend reversals. Here we got the same thing. Lower low on price. What? Higher low on the cycle indicator that we've created. Higher low. Momentum shift. So now the strength has come out of the down move, and strength is starting to go up. Timing, this is the time you want to get in. And you do not get stopped out, and you actually get in before the next trend starts for a fantastic reward to risk ratio. Can also work for contractions. Here we've just been in a contracting market going sideways, and there's another cycle in the market, which is expansion contraction. I love to trade these. So here the market's been going sideways. See the 50 MA is pretty flat. Now we get higher high on price, lower high on %D, the blue line, lower high, momentum shift, boom. So let's summarize, and then I'm going to turn it over to Jeff, and he's going to show you more about the details of the plugin. But as far as the methodology goes, all we're doing is waiting for the alignment of the 5 energies to put the odds on your side. And again, if you missed it, here is a little review. All we're doing is looking for, number one, when we look at a chart, we look for trend. What's the trend? Which side of the market do I want to be on? Is that enough to take the trade? No. Then I want to make sure that trend is strong, so we get follow through after we get in. That's the second energy, momentum. Is that enough to take a trade? No, because now we have to determine what time to get in. When? When is this market going to start moving? When is going to be the final low? When is going to be the final high? So that's where we use our cycle indicator. And then we want to make sure we're bouncing off support or resistance, depending on whether we're going long or short. And then we still won't even take the trade unless the higher time frame, the fractal energy, has the momentum indicator angling in the direction of our trade. So that's it. It's robust. It's adaptable. I use the same 5 energy method, trading stocks, commodities, options, currencies, futures. I use the same 5 energy method when I'm doing my long-term investing, swing trading, or day trading. So it's very simple, it's very objective, very robust. We're pretty much counting to 5. You can do that. We all can do that. And why is it so adaptable? Why is it so flexible? It's very simple. Because we're just measuring the actual energy of the flow of money in whatever market and whatever time frame you put on your chart. That's how simple it is. It's kind of like, the way I see it is you start with a chart and you put your toolkit on there, your Top Dog toolkit. And that puts the indicators that are customized and create the signals for you. And by the way, commentaries too and all that stuff. Jeff will show you all that in a minute. It's absolutely astonishing. Then, so we've got a blank chart with the instruments on there. I'll call them instruments instead of indicators because I see them as like the gauges on a dashboard of a car. And they're simply telling us what the energies are of that market. So I could take the speedometer, for example, out of the dashboard of my car, and I could put it in somebody else's car, and it would still measure the speed of that car because it simply measures the speed of whatever car you put it in. So same thing here. We're just taking these instruments that measure the energy of whatever market you put on that chart and whatever time interval you set that chart to. So here's my information, and this is my last slide before I turn it over to Jeff. Again, I'm Dr. Barry Burns from Top Dog Trading. There's my email address. You're welcome to send me any emails with questions you might have. I do have a 5-day free video correspondence course, and this talks about how to trade like the pros, how pros trade differently than amateurs. You get 5 videos with it, 1 video a day for 5 days. And on video 4, I actually share with you my rubber band trade, which is one of my favorite trades, already, by the way, pre-programmed into the Top Dog toolkit for MetaStock. By the way, that's the only place this stuff is available is through MetaStock. These things are not programmed into any other charting platform. So you can try to wing it on your own and read it yourself, but boy, I'll tell you, it's so much easier to have everything signaled for you and have the commentary pages come up and tell you exactly what trade you got. So anyway, if you want to get that 5-day video correspondence course, just go to topdogtrading.net. Please note it's not .com, it's topdogtrading.net. And you're welcome to do that and get some free education. Happy to supply that for you. And at this time, I've been talking about the plugin and the add-ons, so let me turn it over to Jeff, and he will show you exactly what it looks like and how it works.
All right. Thanks, Barry. Very, very informative. All right, and so let's go ahead and just make sure you can hear me real quick. We have, and let me go ahead and change my screen over here real quickly. We have had, and a lot of you have already probably bought the Top Dog Trader Toolkit. It's a great add-on. If you already have it, we just actually released, maybe a couple weeks ago, a brand new version of the Top Dog Trading Toolkit. So I'm going to talk a little bit about what the new version does and what we added. But in addition, I'm going to give a bit of an overview for it. If you've already purchased the Top Dog Trading Toolkit, I would recommend you grab the download and the update, because actually we didn't charge any extra for the update this time around. It's completely free. To get your copy, if you've already purchased Top Dog Toolkit, just go to metastock.com/my-downloads. Okay, I want to kind of give you a little bit of an idea of kind of what is included in the add-on. Of course, with Barry, what we wanted to do is provide something that was very, very complete. And so the first thing that we did was we incorporated his wave counts and the way that he counts waves. I don't think we have quite enough time to kind of go through kind of all of the methodology that's there, but we actually go in there and we'd identify all the single waves, and that'll be done with the expert advisor. Of course, we've also went in and incorporated Let's just look at a chart really, and I want to kind of show you kind of what is new and what is different with this. So I've got a chart of Apple here, and we'll just kind of go through the specifics of what's included. You've got the way Barry counts his waves and his momentum is based on the direction of the moving average. So the first thing that you're going to notice when looking at this is you're going to see that the momentum is either up or down for a specific day, or it's up or down for a specific period of time should probably be a more accurate way to display it. And then if it's up, you're going to see positive wave counts. Like here was our top wave 1. Then our moving average started to head down, so we started to count the down waves, 1, 2, 3, 4. And these are all automatically populated for you. We spent a lot of time on this last year to kind of get this, and it's part of the product itself. Barry talked quite a bit about the momentum wave counts and the stochastics and the divergences between stochastics and price. And you can see that on the chart here. What we do with the toolkit, and this is pretty cool, is we actually kind of identify where those divergences happen on the chart. We actually draw a line under the stochastic to show you that there's a divergence. So if you see these red lines that kind of appear on the stochastics line, that's just telling you that a divergence is happening between the price and the other thing, and the actual security itself. We've also included one of the things that we've added. I'm sure you guys have been using the toolkit for a while. Have been using the momentum. 3-1. One of the first conversations that I had with a gentleman after we released this was, this is really, really cool, but I want to be able to get the wave counts available. And if you kind of put those in the product and make them so I can scan based on what the momentum wave counts are in addition to the wave counts, well then I definitely want to go ahead and buy. So we kind of went back to Barry and kind of talked a little bit about what the momentum wave counts were. And you'll see every time we kind of draw a new wave count on there, you'll see a little bit of a red dot that shows up here. I've also got the expert advisor attached right here. And the expert advisor is actually going to tell us what wave we're on and what date that occurred. So in the case of Apple, we hit a momentum wave count -4 on 10/23. The one before that was -3 at 10/1. -2 at 9/24, and -1 at 9/23/15. In addition to all of the indicators, there are a number of setups. I'm going to jump to my PowerPoint and kind of go to the setup slide just to show you exactly. This is all kind of stuff that Barry talks a little bit. But there's quite a few different trades that you can take along with the direction of the trade. And I've got a list of them. Here's the second chance. We do have support and resistance that is automatically drawn on the chart for you. And let me just get to the part that actually talks about the patterns that are available. Okay, so these are the patterns that are built around this. There's a new trend. So first retrace after the cross long, first retrace after the cross short, the first retrace after the trend long, trend short, second retrace, momentums, first high after dad turns up, down. Reversion to the mean trades, all the different trades that Barry likes to take in his actual trading. And so those are all programmed into MetaStock. If one of those appears on your MetaStock chart, for example, let's just go back in here, what you're going to see is you're going to see a red arrow right here above the chart, or a green arrow right below the chart, depending on whether it's a bullish or a bearish signal. Now, if I move my commentary to that particular day, I'm just going to go ahead and move it right here. It's going to actually tell you which of those patterns is occurring. So in this particular case, on Apple, on August 19th, there is a first cycle high after dad turns down. It gives you an initial entry position. You should get in at 114. An initial stop loss. Your price targets, what you should use as your profit targets to get out of the position. And in addition to that, since a lot of you haven't actually are not familiar maybe with his analytics and how to run things, what we've actually included also is a link to a little bit of an HTML file here. And this will open up in an internet browser, but it actually tells you exactly what the setup is. So you get the first cycle high after the dad turns down as defined as the first time there is a cycle after dad turns down. It's going to basically walk you through the rules of that trade and how to increase your probability of a successful trade, things to look for in that. What I like to do is I like to include with the products that we use enough material so that you're comfortable with what's going on behind the trade, and so that you can understand how to implement that in the actual product itself. So the other thing that we do, since we have all of these programmed into MetaStock, if you're looking for a first cycle high after the DAD turns down, or you want to find a rubber band trade, or you want to have a kind of an idea of where the what momentum cycle things are in, well, what you can do is we have an exploration capability in MetaStock. And so if I come in here, I can actually click in here. I can go to MetaStock. I can go to the Power Console. I can click on the Scan button here. And what it's going to list out, if I come down to the TGT section, which means Top Dog Trader, is going to show you, I can show you the different scans that are available. So there's a confirmation. These are the confirmations that you should be looking at a long trade or a short trade. You've got your DAD trade, your long setup, your rubber band trades, your trend trades, those type of things. Now, if you wanted to kind of scan for a trend trade, what you do is you just say, okay, this is a scan I want to run. Actually, let's do the rubber band trade. So I'll go ahead and look at a top dog rubber band trade here. I want to run a scan for that. And then basically what I can come do is I can come down here and I can say, well, what do you want to scan? And I don't think I'm going to scan the whole market. What I'm going to do is actually, I'll take that check mark out right there. And what I'm going to do, just to kind of run it really quickly, is I'm going to look at this index constituents list right here. And literally, I can come in here and let's just do, for the purpose of time, let's do the S&P 100. Now, what that'll do for me is it's going to go ahead and go through those 100 stocks. If there happens to be a trade today on that rubber band, it's actually going to tell me, and it's going to tell me really, really quickly. So let me go, it's going to finish here in just a second. Looks like we do have a rubber band trade because it's only rejected 92% of the 100. So let's go ahead and look at them. And out of those 100 stocks that we just looked at, Bank of America, Citigroup, Emerson, Goldman Sachs, JP Morgan Chase, Merck, Time Warner, and US Bancorp all had short signals. And I can see that they're short signals because there's a 1 right here in this column that says short. If it was a long signal, then it would give me actually a 1 right here in the long column. But there's no 1s in the long column. It's all short positions. So now I can actually take this list of stocks, decide on the one that I want to do tomorrow as my rubber band trade, and out of the 5 or 6, or maybe buy them all, I'd probably narrow down the list a little bit further. We'd want to go in and run the confirmation scan against this particular one as well, which would automatically enable us to know that, okay, these all had short positions, and they're confirmed on a higher time frame as well. That's really how it runs. It's very, very simple to run this. Another one of the things that we added, and again, this is free if you've already got the Top Dog Trading Toolkit. I know a lot of you have already. In fact, at the beginning, somebody said, well, this is the thing that real traders use. So I assume you like it quite a bit. One of the things that we did add was this Top Dog Wave Counts exploration. And I've already run this, so I'm going to just show you what the reports looks like. If I open it up, it's going to actually show you the momentum, the trend, the support and resistance levels, and you'll be able to see the momentum count in here. So right here, if I click on the momentum count, it's going to give us an 11. That means it's in its 11th wave count. Okay, and its second price wave. So one of the things that a lot of people were asking us for is the momentum wave counts. And the other thing that, so we thought we'd kind of put a way to put that together so you could see exactly what momentum wave counts were, both in the MetaStock Expert Advisor as well as in the scan. All in all, this has been a fantastic product. People love it. Out of the products that we have, I'd say this is probably the one that pushes MetaStock the hardest, with all the lines that we draw, the automatic support, resistance levels, the cycle highs, the cycle lows, the Fibonacci levels. It's just an excellent product. The automatic drawing of the divergences. It's a very cool product, and people have really liked it. So here's a list of the indicators that are included. You get your auto fib lines, you get the support and resistance levels, you of course get the second chance lines, the stochastics, your selective pivots. Quite an all-inclusive package. There's a few templates that are included. The new stuff that they added is added a new indicator for momentum wave counting. It's called the TDT momentum wave count. Looks like I have a spelling error on this slide. It's not the momentum wave count, it's the momentum wave count. But basically what that does is that identifies on the chart for you where a new wave count, momentum wave starts. And we added the ability to do the momentum wave counts in the explorations and in the expert advisor. So, and again, if you've already got the product and you wanted the momentum wave counts, I made them for you. They're available now. If you don't have the product already, I'd recommend you pick it up. It's $499. That's a one-time cost, not an ongoing monthly cost. And if you order it this week, we're going to take it. Not only are we going to do $100 off, that'll be $399 for the webinar today. But in addition to that, we're also going to give you, of course, our money-back guarantee. So you can evaluate it, go through the training materials that come with it, make sure it's going to be helpful for you in your trading, and if it is, well, it's definitely worth $400 at that point. If it's not, you definitely get a refund, and but it's definitely something that you're going to like. So to order, you can come to our website, metastock.com/topdog. If you want to call in your order, you can call in at 1-800-882-3040. So the phone number for that is 800-882-3040. I'll stick around here for a minute to see if there's questions coming in for me to answer, but definitely give us a phone call, 800-882-3040. Okay? Okay, so there are a couple questions coming in. Charles asked, do you scan the shorter time frame first or the longer one, or does it make a difference? Usually, I don't think it actually makes a difference, Charles. You can scan the one that you want, whichever one you want first. Typically, what I'll do is I'll scan the shorter time frame, the one I'm trading from, first, and then run those results through the longer exploration. Keith asked a question called, what is DAD? Well, Mom, I can tell you, is the mother of all moving averages. I don't remember what the acronym for DAD stands for, but I understand it's maybe the father of all moving averages. I can't really give you an answer for that. Russell asked a question, was the manual updated? Yes, we updated the manual with the new version. We added all the new indicators, the new explorations, and that kind of stuff. And of course, that's something that we generally do as part of our process. Again, if you have the product already, I know a lot of you do, just go to our website, metastock.com/mydownloads. It's a free download. You can grab it there. It's a very simple installation. Let us know if you have any problems with that. But again, if you want to get it, you should get it. It's probably one of our more popular products this year, and you can order that at metastock.com/topdog, or give us a call at 800-882-3040. Charles asked a question, is the manual hard copy or digital? It's all digital these days. We can talk more about the reasons we put everything digital, but in a nutshell, no, we did do kind of some trials, and nobody would order the physical product. They all wanted it now, and they didn't want to wait for FedEx to bring it to them. In fact, with one of the products that we did, I kind of printed up maybe like 150 copies of the product just so we could ship it if people wanted the manual. And I think we still have 135 of them left. It's kind of ridiculous, but everything's in a digital format. Save the trees. All right, Charles. Thanks for coming. Let me know if you have any questions for me. Most of you have my email address, but it's jeffrey.gibby@metastock.com. And we'll see you at the next webinar. And try it out. Again, $3.99. Just cheap, and very, very risk-free with the money-back guarantee. It is something that you'll want to take a look at. All right. Thanks, guys. That's it for me. I want to thank Barry for coming. Obviously, he's been very busy. He's spent pretty much the entire month on the road, and this is exactly his first day back, so it's nice to have him. I also want to thank you for spending your time with me. So we'll see you at the next webinar, and give this Top Dog a go. You'll like it. All right. Talk to you later.